Alright guys, welcome back to my YouTube channel. This is Demon FS Academy, where we teach people step by step on how you can understand the financial market, I mean Forex, as a beginner or as a novice. In our first video, we talked about introduction to Forex. We explained every details and everything you need to know as a beginner in the Forex market. Moving forward, we'll be talking about pips. What is pip? When they talk about pips, what do you understand by pip? Like I tell people, a pip or a short form of pip is just points in percentage. Point in percentage means how much do I want to lose in the market and how much do I want to make in the market. Pips is telling us that the market is there for you to make money, but it determines on you. Okay, I want to make $20 today, I want to make $50 today. All these things determine how many pips you want to make in the market. That is why pips work hand in hand with lot size. Like for example, they say a pip is the smallest price change that an asset can make. Now in the forex market, you will know that there's what we call trading view, or we have what we call the MT4 or the MT5, where you trade the market or where you analyze the market. Now on your MT4 and on our MT5, that is when you see how the chart is being moved. So that is when your pips comes in charge. What do I mean your pips comes in charge? That is when you cannot tell yourself, I want to make $20, I want to make $50. That is when your pips works in. Now we'll be making a video on how you understand how to calculate pips with different currency pairs. That will be our next video. Now we are talking about lot size. What is a lot size? Lot size represents the size of your trade in forex. In another interpretation, lot is the number of currency units you will trade in the forex market. Now lot size means how much do I have in the market, how much am I willing to risk in the market, how much am I willing to make in the market. So your lot size determine how much you make or how much you lose. Like pips will tell you this is the amount where I want this market to get to before I will make my profit. But lot size tells you that, okay, I have $100, I want to risk $10, or I want to risk $20, or I want to risk $5 to, and as you are risking that $5, your pips comes in where you now say, okay, I want to risk $5 and I want to use 0.05 and I want to make $30. That is when your pips comes in charge, because how much pips you want to go to the market is not telling you how much you are risking. Now there are three types of lot size. We have the standard lot size, we have the mini lot, and we have the micro lot. Now the standard lot starts from 1.00, while the mini lot starts from 0.1, and the micro lot starts from 0.01. Now your account size, like I explained before, determine how much you want to risk. If you have $100 account, you should stick to the micro lot, which is 0.01, because that is where you are fitting. You don't want to risk much in the market. You don't want to make more mistakes in the market. So you just want to risk some percentage of your money in the market, and it will help you not to lose much. If you have like $500 upwards, you can start talking about the mini risk. When we're talking about the mini lot size, you're talking about the 0.1. Some people will tell you, no, I don't want to risk much. Okay, you can tell them to come down to 0.05. It also helps a lot. When we talk about the standard lot size, that is the odogo of the market. We talk about people that has huge fund in the market. When we talk about $10,000, $20,000, $50,000, that is the people that use the standard lot size. So your risk matters in this industry. You don't want to risk much, you don't want to lose much money, so your lot size matters a lot. As a beginner in the forex market, using a micro lot will help you grow your account, and it will help you make more money, because the small risk you make, the big profit you make. What do I mean? The small risk you take, the big profit you make. Moving forward, we have what we call leverage. What is leverage? Like here, they say leverage results for using borrowed capital as a funded source when investors to expand the firm asset based on generating return on risk capital. Leverage is an investment strategy of using borrowed money, specifically the use of various institution instruments or borrowed capital to increase the potential return of an investment. Now, when we talk about leverage, what comes into your mind? Leverage is all about, I call it, using a smaller thing to acquire a bigger thing. Why do I say so? Yes, leverage will help you to do what? Understand that, okay, I have $100, I have $200, but I want to trade this market that has $7.3 trillion every day. How do I fit into the market? Leverage will give you the what advantage to do that. So your leverage is what gives you the access to trade the financial market, because your $100, your $200 will not give you access to the market. Now, what do leverage does for you? Leverage gives you access to use your $200 to trade this market, which is $7.3 trillion that is being traded every day. Now, who helps you acquire leverage? That is when we talk about what is a forex broker. Your broker helps you to understand, and your broker helps you to borrow capital for you to trade the financial market, because your money cannot trade this market, and your leverage is what will help you to trade the market. So you are using a borrowed money, or you're using a smaller money to acquire that big money in the market. Now, what is a forex broker? A forex broker is a firm that provide traders with access to a platform that allow them to buy and sell foreign currencies. Like I told you, what we are doing here is financial market. It's a global market. What are we doing? We are buying and selling foreign currencies. Now, forex broker gives you what? The platform where you can trade your money. They don't just give you only a platform, they also give you leverage that you will use to trade the money. They know that you have $100, you have $200, but you can't trade this market. What do? They assist you with leverage that will help you do what? Trade the financial market. Like, that's why some broker, you see them, they will have 1:1,000, 1:2,000, 1:5,000, 1:500. All those 1:500 is just telling you that they are borrowing you additional 500 to your capital, or they are borrowing you additional 1,000 to your capital, or they are borrowing you additional 2,000 to your initial capital, that will make you trade the financial market very well. Now, moving forward, we have examples of forex brokers. Like, we have 1 million brokers in the whole world. But as a forex trader, before you choose a broker, you should do what? Know the advantage and disadvantage of a broker. What are these broker offering? What are these broker not offering? Now, we have examples of broker. We have Forex Time, we have OctaFS, Hot Forex, XM Forex, XNES, Top FS, Instant Forex. We have a lot of brokers in the financial market. But as a forex trader, there's one thing I tell people: before you choose a broker, make sure that this broker is well equipped. When I say well equipped, I mean this broker, their leverage is okay, their swap is okay, their commission is okay, their spread is okay. Everything about these brokers are okay. So you don't just wake up and choose any broker and tomorrow you are just crying, this brokers is not good. No, you do your due diligence by choosing the right broker. We have what we call the market makers. They are also a broker. We have what we call the ECM brokers. They are also a broker. We have what we call the CDF brokers. They are also brokers. All these people are people that do what? Give you platform and access to trade the financial market. Now, when we talk about swap, what comes into your mind? Swap is the over Swap is the money your broker charge you overnight. Let's say you place a trade this morning and your trade did not end in profit, and that trade moved to the next day. Your broker charge you some percentage of money for helping you look over that trade throughout the night. We call it gatekeep. Now we have what we call commission. Commission is what the money your broker charge you each time you are in profit. Let's say you are making $10 and you'll be seeing $9.50. That means your broker is charging you 50 cents commission. That is that. And we have what we call spread. What is spread? Spread is the money your broker take each time you execute a trade. Now, some brokers don't charge spread, they charge commission. Some brokers don't charge commission, they charge swap. So all these things matters a lot as you are beginning in this journey. It will help you understand that, okay, I don't want this broker to cut my neck. I want the broker to charge me less. So it makes you to choose a nice broker. Now, when we talk about spread, when you place a trade, the moment your trade is executed, your broker has collected their commission. That is swap. Whether that is spread, sorry. Whether you make profit or you lose that trade, your broker have taken that money. So it's nice for you to choose a broker that take little spread, so that even though you lose that trade, because you can't have 100% analysis in the market. No, even though you lose that trade, you can do what? Still have small money in your account because your broker is not being greedy. Now we have platforms and chatting software. Like I explained in my first training, I told you guys that fundamental analysis is analyzing the economic, social, and political effect that affect the market. And we have some, I told you that we have some platforms where you can go and check what is happening in the financial market. Now we have the Niger Trader, we have the Trading View, we have a lot of them that will help you do what? Go to this platform, check, okay, is there US news today? Is there GBP news today? Is there Australian news today? That will help you make a better decision as a forex trader, not falling into the hand of all these big time traders that when they are inducing liquidities. I know you will not understand what I mean by liquidities, but I will explain that on my next class. I will take my time to explain this time one-on-one with you. Even though you are not seeing me, you are just seeing this thing, you understand everything about the forex market. Now, these are where you can go and check how to trade the fundamental. Okay, is there news today? I don't want to trade today. Let me wait. Tomorrow there will be no news. I will trade tomorrow because I don't have much capital to trade the market. Moving forward, we have forex trader tend to fit into one of the following 6 trading types. Now, when we talk about trading types, we're talking about what type of trader do I want to become as a beginner. We have the scalpers, we have the day traders, we have the swing traders, we have the position traders, we have the agromatic traders, and we have the event drive traders. Now, all these people are all these type of traders. Each and every one of us can fit in depending on your strategy or depending on how you want to go about the market. When we talk about scalpers are these guys that trade for 1 minute to 15 minutes. We have what we call time frame in the market, which I will be teaching you in our next class. Now, the scalpers trade 1 minute to 15 minutes in the market. They don't last long. They analyze just short period of time and they make money and leave the market. We have what we call the day traders. Now, the day traders are the guys that trade from morning till evening. They place their trade 8 a.m. or 9 a.m. in the morning and they are closing 5 p.m. in the evening. They are what we call day traders. And we have people that we call the swing traders. These guys are people that trade big time in the market. They can place a position January and they are exiting by March. So they can be in the market for as long as they see their profit growing. Some of them trade for 1 month. Some of them trade for 2 weeks. Some of them trade for 6 months, depending on how long they want to be in the market. We have the position traders. These guys are the oga pata pata. They can have a trade for 1 year, 2 years. What they keep doing is adding more position in the trade they have already had, because they want to make the big time money in the market. And we have what we call the agromatic trading. Now, what is agromatic trading? People will be like, wondering, is it a type of trading? No. Algorithmic trading rely as a computer program to place trade for them. Now, these people, we call them AI. We call these people that does this thing expert advisor. We have people that what they don't have time to trade, but AI can do the work. They have designed a robot that will place buy and sell for them. And after the end of the day, they will withdraw their profit. So trading with robots is not a bad thing. In as much as a big time traders are profitable traders, they also trade with robots. I know this guy, I don't know if you know him, Goslov. Yeah, he has a big time robot that he makes money with in the financial market. So trading with robots is not a sin. If you come to my DM, I have some good robot I'm trading with, and it has been giving us crazy profit. If you go to my WhatsApp, my Telegram or my TikTok, you see them. I've been posting their results. So trading with robots, a good robot is not bad. If you don't have the time to learn this market on your own, you can also make, okay, I don't have time to learn this market, I don't have time to trade. You can ask us, we'll give you a good working robot that will still be making profit for you. And we have the event drive traders. Now, the event guys traders are the people that do what? Analyze events. When I talk about an event, I'm talking about news. Like I told you in my first video, these guys have made it mandatory that they analyze news. Which events are we trading today? Which news are we trading today? Okay, there is news in USD. They analyze, okay, dollar will be buying today, euro will be selling today, or euro will be selling, dollar will be buying. They analyze it, and what do they do? Excuse. And what do? They trade the market with that fundamental. So that is all for our our second video. All right, guys, if you don't understand anything or you find it difficult to isolate all we have taught you today, you can feel free to chat us or feel free to drop a comment section. And don't forget to subscribe to our YouTube channel, because more videos will be dropping. See you. Bye.